Hello, all you lovely people out there. How are you all doing? I'm Kate Hill and I'm here to give you the best, unbiased and honest commentary about our property markets, along with some fantastic hints and tips. So stay tuned for all your latest property news. Now, forgive the complete, shameless piece of sale promotion just first up, guys. I wanted to give you the heads up on some really exciting news. The new book that I have coming out. It's a must read for anyone who knows a lady keen to turbocharge her financial future. This is a property investing book telling you not just that you should do this, but how you should do this. The link to pre-order your copy is in the description box below. Okay, moving on. The Knight Frank Global House Price Index shows that Australian house prices grew 19% in the past year after 8 consecutive quarters of price increases. Australian house prices continue to soar, with new research revealing it is one of the top 5 countries in the world for house price growth in the past 12 months. The report, which tracks housing prices across 56 countries and territories, shows Australia is now 5th on the price growth index behind Turkey, South Korea, New Zealand, Sweden. Knight Frank Australia say that the impact of the pandemic on house prices in Australia is clear. The average annual growth from 2015 to 20 was 4.4%, which increased to 9.8% from the start of the pandemic. The last time Australia was in top 5 position was at the end of 2015, prior to tightening lending restrictions being implemented. National residential vacancy rates fell to yet another new low of 1.5% in November, according to new data from SQM Research. The total number of vacancies Australia-wide now stands at 55,000, which is down from nearly 57,000 in October. Melbourne and Brisbane's vacancy rates dropped to 3.2% and 1.3% in November. Many regional townships in New South Wales recorded a tightening in vacancy rates over the month of November, such as Dubbo and New South Wales North Coast, which recorded 0.4% and 0.5% respectively. In Perth, Adelaide, Canberra, Darwin and Hobart, the vacancy rates remained well below 1%. SQM say that many towns are expected to have the no vacancy sign out over the holiday period. SQM Managing Director says that the no vacancy sign is lit up across most of Australia. There has never been a time when 5 of our 8 capital cities simultaneously recorded rental vacancy rates under 1%. This has translated into surging rentals, which you can see in the upward swing of this chart here. The auction market is continuing to grow in strength, with thousands of homes put under the hammer in the past week across all capital cities. There were 4,756 homes taken to auction across our combined capitals, the second busiest auction week since CoreLogic records began in 2008. This is the 4th consecutive week where more than 4,000 capital city homes have been taken to auction, something that has never been seen before. While the number of properties being offered is growing, the auction clearance rate has started to trend down a little lower, although some cities do remain strong. The national preliminary auction clearance rate was a weighted average of 69%, the lowest since late August. The smaller capital cities performed the best, with Adelaide achieving the highest preliminary clearance rate of 71%, followed by Canberra and Brisbane. Melbourne's clearance rate was 62% and Sydney's was 60%. CoreLogic report that national home values rose 4.4% in the 3 months to November, which has eased from a 5.2% increase in the 3 months to August. But dwelling values in Australia are 22.2% higher over the past 12 months, which is the highest annual appreciation since June 1989. Some of the standout performers here have been regional New South Wales and regional Tasmania, both with 29%, Canberra at 24%, Brisbane and Sydney 25%, Hobart 27%. Sales volumes rose 39.9% in the 12 months to November, and transaction volumes through the month of November were estimated to be 56% above the 5-year average at 61,000. Properties are now taking slightly longer to sell. Across the combined capital cities, median days on market have increased from 21 days in the 3 months to May to 25 days in the 3 months to November. This varies hugely across the country, of course, so don't pay too much mind to a national average. In spite of these higher stock levels and properties take longer to sell, vendor discounting indicates that seller price expectations are holding firm. On the whole, properties are still selling at the expected sell price and above. And one metric that I think is key is that the new listings have jumped 22% since the beginning of October, which is also when restrictions around the property inspections eased in Melbourne. Now, this has made for a robust selling season in spring, with new listings finishing 19% higher than the 5-year average. But overall, total listings remain 23% below the 5-year average, due to very strong absorption from sales. So while stock levels are normalising across Sydney and Melbourne, much of regional Australia and smaller capital cities are sitting well below total stock levels in 2020. So this is going to keep prices tight. I will keep you posted on all things property from around Australia as our year progresses. Don't forget to pre-order your copy of my book. And don't forget to hit that subscribe button, hit the like button if you're enjoying the free content, and I will see you all really soon. Happy Christmas, everyone. Bye.